You're looking for ways to save some money on your monthly mortgage every month. Makes sense. We're all just trying to find ways to survive out here. In this video, I'm going to share 3 simple hacks that can help you save money on your mortgage every month. My name's Darren Tsai. I'm a mortgage broker here in California, and my channel is dedicating to helping people just like you manage their equity and build wealth through real estate. Okay, so here's the 3 ways, just real quick. Number 1, get rid of mortgage insurance. There's multiple layers to that one. Number 2, recast versus refinancing your mortgage. Those are 2 different things. I want you to pick the right option. And number 3, changing your escrow accounts if you have one. Number 1, get rid of mortgage insurance. There's 2 different kinds: private mortgage insurance on conventional loans and mortgage insurance premium if you got an FHA loan. Getting rid of PMI or MIP is some low-hanging fruit. So on conventional loans, your mortgage insurance should actually automatically fall off once your loan balance is at 78% or less of your home's estimated value. You will actually need to call your mortgage servicer and basically request them to remove it when you're close to this. I actually am making this video because this happened to one of my clients recently. I was looking at their home value, I was looking at their mortgage balance, and their rate is not low enough to refinance. But I said, hey, you should call your servicer and see if you can get mortgage insurance removed. So I called the servicer, kind of gave them a hard time. They were like, it's only $70 a month, but you might have to pay $100 or $150 to get like a value report. And this actually made them hesitate to do it. I said, look, $700 a year. You guys have a new baby on the way. That's your diaper money for a couple months at least, right? And they, of course, agreed. And they said, yeah, let's just go through with it. And of course, they ended up paying for it and they got their mortgage insurance removed. Now, this is for conventional loans, right? This is for a conventional loan. Now, on an FHA loan, those have what's called mortgage insurance premium. And there's 2 ways to get rid of that if you have an FHA loan. The first is that you put 10% down when you bought the house. That's usually not the case with FHA buyers. They're usually putting 3.5% down. But if you did put 10% down, then you're just going to wait 11 years and it's gone. The other way is to refinance out of an FHA loan into a conventional loan. So in that scenario, you would actually need the loan to be 80% of the home's value when you refinance to not have mortgage insurance. Hack number 2, recast or refinance. You pick. Let's go through what each one is first. A recast is when they re-amortize your mortgage. Let's say your loan balance is $400,000 and you just got a huge bonus at work for $40,000. That would be great. I hope that happens to you. But you take that 40 G's and you pay down your principal balance to $360. So now that you've cut your principal balance down to $360, you're going to call your servicer and you're going to say, can you please recast my loan? And what will happen is they're going to recalculate your monthly payment using that new $360K versus $400K. And you're going to keep the same interest rate. You're going to keep the same term, but you're just going to have a smaller payment. Okay, so the example that I just shared, right? You have $400K loan balance. Let's say you have a 6.5% interest rate, 27 years left. Let's say your principal and interest here is $2,622 a month roughly. After you do the $40K payment, you drop the balance to $360 and you recast, your new payment is $2,360 a month. So you're roughly saving $262 a month by paying down the principal. And there shouldn't be closing costs related to this. Servicer might charge you like $100 or something, but there shouldn't be any significant fees and you're saving money every month. Now let's talk about a refinance. I'm sure most of you know what this is, but if you don't, that's cool too. You are replacing your current mortgage with a new one. So new loan replaces your current one. And the most common reason people refinance is to save money on their monthly payment. Some people will do cash out too, but for the most part, people just want to save money if they can. Most of the time, people are refinancing to lower the rate or change loan products when they're saving money. There will be closing costs associated with refinancing. So before you refinance, it's really important to do a break-even calculation, right? So take those closing costs, divide it by the monthly savings, look at how long it's going to take to recover those closing costs. And if you're going to stay in the home longer than that, then it probably makes sense to do it. A lot of people use 3 years as their benchmark, but it really just depends on you and your family's financial goals. And so I'll just give you some basic numbers as a educational tool, an example. Closing costs are $6,000, savings are $257 a month. That's about 23 months. If you're staying in that home for 2 years or more, then you're going to actually see the savings because you'll recover those closing costs in about 2 years. So the third hack that I have for you is shrink your escrow account if you have one. So many mortgages, they're going to collect your property taxes, insurance, and mortgage insurance payment along with your mortgage payment every month. And so even if your loan doesn't change, you might be able to save money every month by changing your escrow amounts. In many places, especially Texas, right? You guys have super high property taxes. So if you feel like your property taxes are too high, talk to the county, see if they'll reassess and they'll get them lowered. I know there are services out there that will do that on your behalf for like 25% of the annual savings or something like that. But that is one way to lower your payment right there. The other thing is homeowners insurance. Homeowners insurance has gotten out of control in many states, right? I was talking to some people in Florida. They're paying more than we are here in California. But in some parts of California, home insurance is crazy because of fire insurance as well. So I would say it's really important to get multiple quotes on homeowners insurance because depending on that quote, that can lower your payment quite a bit every month as well. Okay, so now I'm going to share a current client scenario, not exact numbers because it's personal information, but I do want to share it for educational purposes. So this client is taking on an $800,000 loan. It's a 30-year conventional loan. Their new interest rate is going to be 6.125. Their old interest rate was 6.625. Okay, so their new monthly payment that they're going to be paying their mortgage company every month is going to be about $5,000. Their mortgage payment is going to include principal and interest and their private mortgage insurance, PMI. Their old principal and interest was $5,440. And on top of that, their mortgage insurance was about $380 a month. So right off the bat, we lowered their mortgage insurance because their credit improved from when they bought to now, and their monthly payment went down. And so every month they were paying about $6,800 a month, and now their payment's going to be down to $5,000. We did this by refinancing and lowered the interest rate. We reduced their mortgage insurance because their credit improved. And we got rid of their escrow account. Every month they'd be paying about $1,400 for property taxes and home insurance. But now they get to pay those outside of their mortgage payment. They're going to take care of those. And why I like that for them is because this mortgage servicer is actually going to write them a check for $8,000 of whatever's in that account. And they're going to get that back in 2 weeks. So they can use that $8,000 towards paying for property taxes, paying for the insurance, but it just gives them more control of their money instead of this mortgage company just holding it for them. The true savings here was about $450 a month between the lower mortgage payment and lower mortgage insurance payment. But in their scenario, we combined a bunch of these hacks and they are very happy with the results. All right, so quick summary here. If you can, get rid of that mortgage insurance. If you have an FHA loan or a conventional loan, look at getting rid of it. Look at doing a recast if you're paying down a bunch of principal, or look at refinancing. Rates are at their lowest point in the last 12 months. So if you bought in the last 12 months, maybe you can refinance, take a look at it. And then if you do have an escrow account, make sure that if you're in a place where you can actually get your property taxes reassessed for being too high, go and appeal that, go and challenge that, see if you can get them lower, and then get multiple homeowners insurance quotes. See if you can get that cost down as well. And so if you have any questions about your specific scenario, feel free to email me, Darren@realdarrenside.com. My phone number is also down below. You can text me and we can set up a no pressure call, just chat about your scenario, and we can see if we can save you and your family some money every month. As always, I hope you learned something new from this video, and I hope this video helped you, and I'll see you on the next video.